Hey everyone, this is a market update for Sunday, October 17th, 2010. It's been a while since I have posted a video, but I think I'm going to start doing these as frequently as I can once again, perhaps every weekend. Looking at the S&P 500 daily charts first here, there have been a lot of talks that perhaps this up move here from our 1010 low and our 1040 low, we have been in a new uptrend, and perhaps we could take out the 1220 highs. I personally don't believe this. I still think this is a corrective wave. It looks more like an A, B, C than a 1, 2, 3. Again, it's not a clear impulse. We have a lot of choppiness in here, choppiness at this top, and as well as in the middle of this. If this was to be a new impulse, it would be counted as 1, 2, 3. And typically third waves don't have this type of choppiness, and a lot of these dojis and long shadows in their candles is typically straightforward and up. So I don't believe it to be a third wave up or a new uptrend. Again, we are in this rising bearish wedge here. I believe prices will collapse out to the downside, and we should be testing this low of 1040, believe it or not. Again, looking at the S&P daily once again with a more in-depth view of the internals. You can see here from our April high we had this 1, 2, 3, 4, 5 waves down, and so far this seems like an A, B, C up. Seems more choppy and corrective. And another reason I think this is a corrective wave is because of the market internals. If you take a look at breadth here on these 3 days that I have marked, these were the 3 strongest market internals to the downside during the down move from 1220 to 1010. We had 73 to 1 down, 119 to 1, and 59 to 1. All 3 of these days were pretty significantly down, 35 to 40 points on the S&P. And now, since this 1010 low, I have also marked the 3 most bullish days we have had, and they measure at 20 to 1, 24 to 1, and 15 to 1 on the upside. Again, they're not very impulsive, as compared to the down move we have had. So if this was to be a new strong up move, I would like to see the internals at least somewhere in the 30 to 40 or even 50 to 1 up days, but we just don't have that same strength of buying that we did selling back in early spring, late spring, early summer. So again, I still feel that this is just a corrective rally, although it has stretched out pretty far. We have broken the 78.6% retracement, but that is typical for wave 2s, especially after the leading diagonal like we had down to retrace fairly sharp. We had the same back in October of 2007. Looking at the SPY daily, just to point out some divergences here. Volume has been declining steadily since our low at 1010. You can see that here. Even the volume average has dipped a little bit, and at the same time the MACD histogram is making lower bars since about mid-September all the way to our highs right here. So some key divergences there. I think something to take a look at and take into consideration. Looking at the 15-minute S&P, just going over what happened on Friday, we had the shooting star right off the open. Had some nice follow through, but it didn't continue on. I would have liked to see this low from Thursday be taken out, but it didn't happen. But the rest of the day we were in this kind of pennant triangle shape, just chopping around sideways. So it could be, it is a continuation pattern. Perhaps we do have one more high coming. So tomorrow obviously we have to watch this high right here at 1181, and then 1184 are the key numbers to watch for tomorrow. Going back to the dollar here, I want to take a look at. Again, a lot of people are bearish on the dollar. I am not. I think the dollar has bottomed here. We had a pretty nice reversal candle put in on Friday. Despite being lower for most of the day, the dollar did rally back. Again, we've had 5 waves up and what looks like 3 waves down. The people who are bearish on the dollar would count this as a 1, 2, 3 down, but if this is a wave 2, it certainly does not look like one. Wave 2s are usually not that flat and very small, unless we do get a sharp wave 4, but that would make us cross into wave 1 territory. So I think this is still a very sharp 5-3-5 zigzag on the US dollar. I think the dollar is ready to turn up. I think that the bottom has been put in. Like I said, this is a pretty bullish reversal candle, so we'll see how that plays out. On the smaller time frame on the dollar, this is the hourly charts from our highs. Again, we have some divergences here. MACD is keep making lower highs. Same with the RSI. So again, the MACD histogram has also turned bullish, and I want to take a look at this channel right here that has been playing out since our highs on the dollar. We had this acceleration channel down from our peak in early September. We did break over that slightly, and now I think we'll have a test of this longer term channel, and hopefully we can break over that very soon. I just want to take a look at also the euro real quick. Again, euro, we did break out of just slightly over my target range, but this could be a bearish engulfing candle we have put in, so we'll have to see how the euro plays out. And speaking of the currencies, I think it's important to take a look at gold real quick. Again, gold has had this very strong and parabolic up move since our lows in late July, early August. It's been nothing but up and up for gold, particularly due to the crashing dollar. But I think in the short run, gold needs to take a breather here. We do have 1, 2, and I believe this is a third wave. I think we should have a fourth wave. I'm expecting a test of at least the mid 1150s here. So a decent $200 drop in the gold futures here. 1150 again, like I said, is key support here. Our pivot from our minor wave 4 low. So I expect some type of retracement. I think most of this parabolic move will be taken out just so gold can take a breather and shake out most of the longs before heading back up. Another thing I want to take a look at real quick is Apple. Of course, Apple has earnings on Monday, and a lot of people will be watching that, perhaps counting on Apple to take the Nasdaq higher. But again, Apple has had once again a very parabolic move to the upside, as have most of the big name tech stocks. So I mean, almost $80 or so in the past 2 months is pretty significant for any stock. And Apple usually has gapped up significantly on earnings, but I think the move, we had a $12 move on Friday here, just in expectation of good earnings. So I don't believe Apple will head to the moon, 400 or 350. I think Apple is getting very toppy here. It's a very pushed move, and I think the week longs will be shaken out, and we should at least come back and retrace some of this move, if not test at least 280 pretty soon. I also want to take a look at XLF, the financial index. Of course, the past few days, the financials have been hammered. Especially like Bank of America and Citigroup have been down fairly a good amount lately. Again, we're watching this head and shoulders pattern develop. We have the left shoulder, the head, and the right shoulder, and this channel, for the most part, has been holding. We did get rejected out of here, just had a slight breakthrough, but we did come back down and gap down on Thursday and Friday. Had a nice 1 3/4% down. So I expect the financials to lead us down once tech gives up their strength. Obviously, taking a look at the Nasdaq real quick. Obviously, the biggest gainer this week was the Nasdaq. You can see here almost to our April highs. In fact, the Nasdaq 100 has broken over its April highs. Right here, you can see that. Again, a really parabolic looking move again, but the Nasdaq 100 is known to do that because really the Nasdaq 100 is driven by the big name stocks such as Apple, Google, RIM, Amazon, and whatnot. So Nasdaq 100 is certainly more bullish than any of the other indexes. Looking at the Russell real quick again, Russell is somewhere in the middle of the 3 or the 4 big indexes here. It still has not taken out its recovery from the flash crash highs, so we should be watching for 716, 715 on the Russell to come if we do have an up push. Just want to go back really quickly to the smaller time frame on the S&P. This ending diagonal count 1, 2, 3, 4. We could get one more push up. Again, we have to watch how the market reacts if it gets up to 1180 or 1185 on Monday. So we'll have to watch. If that does get broken, perhaps another test of this trend line is coming, maybe 1190, even 1195. But I think for this overall bearish count to remain intact, I think the bulls must or the bears must keep 1200 in control. I think breaking over 1200 is not good news for the bears. So we'll have to see how this week plays out. Obviously, Apple earnings tomorrow. So we'll see how the market reacts to that on Tuesday and perhaps the rest of the week. Good luck and have a nice week.